Hey everybody, this is Jim at SP500chart.com. It is January 13th, 2013. Halftime with the Atlanta Falcons Seattle Seahawks game. I'm from Atlanta, so condolences, at this point at least, to those of you in the upper Northwest. You still could be a good game. But look, before we get started, we're going to take a look at what happened on Friday and also review the week. Before we get started, as always, I need to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. And by the way, I don't drink, so I'm not like drinking beer watching the game, and now I'm going to do a video. But I just need to remind you that I can draw lines on charts, but you have to draw your own conclusions from your own research. You need to make investment decisions that are suitable for your personal financial situation. If you've been drinking during the game, if you're a Seattle's fan, I can understand that. I need to remind you, get sober, then make up your mind what you want to do. I am not a licensed financial professional. I am just a guy who draws lines on charts. Okay, we're starting out looking at a daily chart. Why are we looking at a daily chart? Well, the main reason is I want to show you this top resistance line right here. And the reason I want you to see that is because at some point, because that is a rising line, that does not usually mean good things when you have a series of dips and valleys. You can see what I'm getting at. If I didn't know better, I would say if this does not hold the exact shape as a rising wedge, it certainly has a lot of the features of a rising wedge, and that is a narrowing of both time frame and degree of motion from highs to lows. Now, where I've got this line drawn, is that absolutely where it should be drawn? I cannot tell you that. I've had this line on the chart for a long time. And it was drawn over the highs of 2011 as well as the highs of spring of 2012. You can see that the fall highs got over that line. So this line actually, this would be the, what's the best word I'm looking for here? This would be the, quote, best case scenario if you are a bear and you're looking for a reason to say the markets should now be selling off. Okay, this is these 2 points right here place this line at the lowest point that it could be at. Now, what if we move this line and instead we draw it over the last two tops? Well, that also may be right. And if it is, then you can see this market still has some room to run. But at any rate, it sure is looking to me like we are in that pattern of what I would call something of diminishing returns while the market slowly heads upward. And that often results in the formation of a top, because eventually eventually those who are long say, you know, there's just not enough in this market to justify the risk. So I think I'll sell. And once that starts to happen, then you begin to see a top get put in. Now, let's look at the week. And basically, it was an interesting week because we started out with a break below this line. Now, once we got the break below this little, I've called it a typhoon flag. Once we got the break below that line, that was a signal that we would not expect the S&P to get back over this line because it was a rising line of support that broke to the downside. And despite the fact that the markets were up, you know, roughly 16, 18 points off their lows on the 8th, it has not gotten up over this line. As a matter of fact, if we move in on let's just do it on a 10-minute chart. I think that'll give us a little bit better look at it. You can see we create a parallel line, you can see that we are now in what appears to be something of a second channel that has moved to the right of this typhoon flag. So going into this week, by the way, nothing really that surprising last week except for one bad call I made on Tuesday, thinking this would play like a bear flag. But I will remind you, in my defense, not just in my defense, but in defense of technical analysis, you don't call that a bear flag until you break that line. That line, that resistance, support line never broke. As a matter of fact, we got up over this possible trend line right here. I say possible because we really didn't have but 2 data points on it. And now I would expect this line to be something of support. So going into the week, we've got this dark blue line that if we look at it, let me see if that's get it show up on the, where'd it go? Oh, here it is right here. Here's this dark blue line that was holding the markets up over the last 2 fairly major bottoms in October 2011 and late May, June of 2012. That line broke, and you could see when it broke in a way that speaks of technical significance. It bounced on it for about a week or week and a half. Then it just busted through. Now it looks like this line should serve as resistance. So let's see going into the week if this line indeed serves as resistance. And if we do come back down, and if we do have a few days of selling, I frankly would probably expect this bottom line to produce a bounce. And one of the main reasons I say that is this bottom line will likely be very near gap support on the big move we had on the first trading day of 2013. So going into it for next week, again, the weekly review is basically we ended this downtrend and we started an uptrend. Now the question is, where does this uptrend butt its head up against something substantial enough to turn it back down? I think it's very close. But again, we have a line that we can keep a watch on, so that in case I'm wrong about expecting resistance in the mid 1470s, if I'm wrong and the market keeps plowing on up, then this line will not have broken. And if this line doesn't break, don't do anything. I mean, that's just my friendly advice. I can't offer it because I am not a financial professional. But you know what I'm saying. We have an indicator here that should give us a clue as to when this move that started up on the 8th, actually started up mid-morning of the 8th, when this move will be over. I think the breaking of this line will be our clue. So guys, that is the video and the weekly review for January 13th, actually for the week ending January 11. I want to thank you for taking time out of your day to watch this. And I want to ask you a simple question. How much do you spend per day on coffee? Would you be willing to part with one cheap cup of coffee every day that's less than $1 for each trading day to be a member at sp500chart.com? If you can cough up $19.95 a month, then you get to see every video that I do on the day that it is produced. So go check it out at sp500chart.com. 19 bucks? Really? I mean, $19.95, excuse me. That's pretty reasonable, I think, in today's market. And I think if you'll go back and look at some old videos, you'll probably see that it might have been educational. After all, that's what this is designed to be. So look, guys, take care. Thanks for watching.